Well, thanks again for joining us. I'm Marlin Bohling with you on a Monday as we watch our ag commodity trade. Let's get you updated on what the grain markets are doing right now. We'll start with this corn market and we'll go to the big board. Our quotes are provided by bar chart, and you have July corn 2 cents lower at 607. Remember, we started out unchanged. And right now you have December corn 4 higher at 545 1/4. Well, that would appear to be a little bit of spread type activity. That spread changing by about 6.5 cents right now. Okay, let's go to the soybeans. What's going on over here? In soybeans, you have July 4 higher. We're at 1356.5, and you have November 4 1/4 higher at 1188. So they're staying pretty consistent in their gains between the nearbys and the new crop over there. In the wheat in Chicago, July is 5 3/4 higher. We're at 624 3/4. That's a good 7, almost 8 cents off of our earlier low of the day, and we're within 7 cents of our high from last night and early this morning. Meanwhile, in Kansas City wheat, July is 11.5 higher. We're at 823 3/4. It's kind of in the middle of its trading range as well, about 7 cents off of our earlier high. Spring wheat trade in Minneapolis has July trading 13 1/4 higher at 821. And let's go to the cotton market, see what's going on there. In July, we're now 13 points lower at 85.92 per pound. December new crop, well, it's down just 9 points. We're at 81.76. Well, I'm honored to be joined by the one and only Chris Swift of Swift Trading, right here in Nashville. Thank you for joining us, sir.
Absolutely. Always a pleasure.
I could see you coming jogging down the street.
Yeah.
So on the markets, we're generally a little bit optimistic, I guess you would say, maybe a little bit bullish this morning, but not overly so. The most enthusiasm is in the wheat today.
Right.
Why?
I would dare to say that the Russian corridor news of them not wanting to reestablish those trade deals is probably some of it in the wheat. But we know that especially Kansas City has always been really, really difficult right now in the weather that they have had. But all the other wheat seems to be really good. We were up in Scottsville, Kentucky this weekend, and all the wheat there, some of it had already been thrashed and really looked really good. And then the corn was probably the most interesting, with the ones that were planted really early had a really good stand, very green, dark colored. The ones that are planted late had some really drought stress to them, but all of them had that little turn in the leaf there. And you can see that's a really rolling kind of platform there. And so what you see is down in the low spots there, it's a lot darker, and up on top of the hills, it's a little bit lighter. Yeah,
you can tell the plants are getting a little bit moisture stressed in some areas there. But the rainfall that did occur has been very spotty. I mean, some folks that got a little rain, they may have gotten a fairly large amount in a local area, maybe 2 miles wide or something. So how does the trade deal with that? I mean, even in the forecast maps that are coming out for down the road, from what I understand, they keep talking about spotty rain.
Right.
And that makes traders really confused. It drives them nuts when there's no general coverage. Is it good? Is it bad? You know, how much coverage is it?
It creates a lot of volatility, and volatility presents opportunities. So when we say, you know, I didn't get the opportunity to do this when the price was there, the volatility has the opportunity to do that. So prices go up, they go down. And so what you might want to do is look at, where do I think we might see a spike if we do, and just lay some orders in there. If it doesn't ever reach there, then it wasn't going to happen anyway. But if it does happen to happen, then those were the areas that you wanted to get some marketing done. And that goes the same for the cattle feeders. Unfortunately, now cattle feeders are looking at a complete carry charge market going forward. After July goes off the board, September is the lowest month on the board, and they keep climbing after that.
Okay, so when it comes to the corn, I mean, you're going to have maybe a little different mindset on marketing what's left in the bin versus new crop right now.
Absolutely. Well, and, you know, when you look at old crop, there's really no reason to own any old crop right now. It's the highest price that there is on the board. And even out into March, May next year, you don't have enough carry there to give you the same price as what you do right now.
All right. Well put. Well, we'll come back in a moment. We'll take a look at livestock next. All right, we're back with you, and we're talking with the one and only Chris Swift in-house. And it's always good to have Chris stop by and talk with us. One thing I wanted to point out, and kind of tongue-in-cheek here, I was razzing Chris about this a little bit ago. Let's look at the board. Here's one I haven't covered today. Oats. Yes, indeed. We have to cover the oats market. July is now 5 1/4 higher. Look at that. Percentage-wise, that is one of the biggest movers today. Yep. 5 1/4 higher at 342 3/4. I'm just throwing it out there. I'm not offering why, but the old saying, oats knows. I don't know what they know today, but I just thought that was interesting. All right, let's look at live cattle. What's going on? We're higher. June up 70. August up 45. We're at 173.35, so apparently they haven't found a top yet. Feeder cattle trade today. Right now you have the August 25 lower at 241.65. September a nickel lower at 244.95, but still pretty lofty levels. We're about $1.15 though off of our earlier high this morning. And on lean hogs, well, lean hogs have been backtracking, but they're coming off of those lows big time now. June lean hogs, 75 lower at 85.97, but that's $1.10 off of our earlier low. And July now just 37 lower at 84.27. Well, how about that? That's almost $2 off of its earlier low this morning. So volatility, the word of the day in lean hogs. So let's talk about this. Let's focus first on the cattle market, Chris. Okay. That's right in your wheelhouse there. What's going on? Had an explosion in cash cattle last week.
Right. Polar opposites in the futures market. So last week, we had the futures market run straight up in the fat cattle, closing a positive basis there where the cash had been trading higher. And then in the feeder cattle market, just the opposite. They widened a negative basis out to, in some cases, over $40. So they're going polar opposite of one another when you look at the basis in the fat cattle market converging, and in the feeder cattle market, they're diverging. And, you know, got 3 months to go to converge in the feeder cattle market. And it's going to be real interesting to see, does the cattle feeder really step up and pay these kinds of prices that are reflected in the futures, or do the futures soften some and come back down to kind of what we think reality of what cattle feeders are going to want to pay as we come into the summer?
How many times have you seen them do this, and to that extreme?
Well, we see the game of short covering quite a bit. We see packers that are short bought. They need inventory, but they're not really going to buy it yet. They're hoping that the price goes down. I think last week they got kind of caught on that just a little bit where they needed additional inventory. So everybody in every business does that. We all try to go right down to the wire to get the best deal, and then when we find out that we can't, then we go to the market and we pay whatever we have to be able to meet our obligations.
Sure, just to make it sound so simple. Yeah, all right. Well, we'll take your word for it there. I'm glad you explained that. But thanks for coming in. I appreciate it very much. It's always like going to school when you come in. Chris Swift of Swift Trading with us here in-house in Nashville. Tammy, with that, I'll turn it back to you.